Hey Smash, pleasure to do this Q&A session with you. Really excited about this. I think we had a lot of really good questions, and I'm glad we get together for this.
Me too, Mike. Appreciate it, man. Thanks for being here, taking the time to do this for everybody.
Absolutely. All right, so I think we got a question there, right? Let's kick it off. You want to kick that one off?
Sure, sure. All right. Tips or advice on overcoming the fear of losing when starting out, growing a small account, specifically about the moment when you see the setup, know the odds are in your favor, but you still chicken out and don't take the trade, watching it go without you. So, yeah, that's pretty painful, right? That's pretty painful. Been there. Um, I would start out saying that, you've to take the emotions out, you've got to do things that you're comfortable with, So if the size is killing you, maybe try 10 shares, try 50 shares, try 100 shares. Um, I don't know what else to do it other than experience. You see it enough times, track it, but you got to take the trade, right? You got to take it to track it. So I don't know, Mike, what do you think?
I think it's a great question, right? So to be able to trade any setup, in my opinion, I got to have confidence in it, right? And the way I build confidence in my setups is to track them, to journal them, to take screenshots, to monitor it, and then eventually I'll put some on. I'll probably be a lot smaller than I would in a regular setup, but just to kick it off and start. And the smaller size, like you said, is key because you don't want to be trading the PNL. You don't want to be avoiding trades just because it's your first time looking at that setup or first time looking to trade the setup. So definitely keep it small. Your confidence will grow with it over time. It's a setup that I've been trading for years. My confidence level is going to be very different than something I'm trying new. So just be aware of that. And I think, like you said, track it, and that's it. It might turn into an A plus setup. It might not. Right.
Right, right. I'm with you. So last part here said chicken out and don't take the trade. Okay, watching it go without you. Yeah. So one other thing I would comment on that is I I would take a chart. If that happened to me, I would take a chart and I would print this thing out and put it up on my monitor in front of me and with my executions on it. Sometimes, like getting out too early, maybe I did take the trade and I got out too early and then it did this. I'll print that out. So that might be something else that might be helpful for you guys. It really helped me. I put it up. I had 3 or 4 charts in front of my monitor. I still do it. When I do something stupid, I'll put it up in front of me for a few days.
Yeah, that's great.
Reminders.
A little reminder here and there.
Yeah.
Absolutely. And in addition to, my Evernote and TraderView that I use for tracking trades, I also have a physical binder on my desk. And when I come across one of those A plus setups that I want to make sure that I nail every time I see them, I'll print out the sheet, I'll print out the research behind it, and I'll put it in the binder. And then that way it's in back of my head knowing that that's an A plus setup. And when I see it, I better nail it. Otherwise I'm missing out. So definitely do it that way.
Right. Good stuff, man. Good stuff.
All
All right.
right, so I'll take this one. What are your thoughts on executing the trades with stop orders or limit orders? What kind of advantages and disadvantages do you see from each execution type? And that's from Japor. So definitely a good question in the sense that it's always in the back of my head. What should I do? Should I put a physical stop in this one? Should I try to execute the exit manually? Do I want it to be a stop market, a stop limit? And before I'll answer that, I think with anything in trading, it's safe to say that there's a trade-off to everything, right? So if I'm using physical stops, then I'm trading off, sometimes I'll get wicked out unnecessarily and then it turns and goes the other way. That's the trade-off for that. But at the same time, it helps my discipline and it helps my ability to get out at the prices that I want to get out at, as opposed to watching it go even further and then taking my time to exit. So I personally like to use hard stops where I can, where I won't be affecting the price too much, where my size won't be getting slipped too much. If it's a very liquid name and it's a specific number that I'm trading at, I'm definitely putting a stop in. That way I could focus on other things as opposed to just looking to execute. And I will use stop orders quite a bit. What about you,
Right.
Smash?
Yeah. Good stuff. I will definitely second that. especially starting out. I still use hard stops as well, but especially starting out. I mean, let's look at this position here. Let's say I want to get short here, I want to get short at 369. I'm risking this high of 370. Um, if I'm risking, so I size in, I size in, let's just say 1,000 shares here and I'm risking $1,000, right? So I'm risking $1. I size in with 1,000 shares right here with a plan to add uh, one time right here over before 370. Um, I've sized in. The whole plan, the trade plan is based on a number, right? Let's say it's based on 370.01.
Yep.
If it breaks 370.01, I'm outside. I'm trading outside of my plan. And what better way to do that than with a stop order, you know? And a lot of times I'll let this little pop happen and then throw my stop order in. A lot of times I'll use a half stop, um, but 90% of the time I have a stop in place, and especially on days where I don't trust myself. Sometimes I think I don't want to be stubborn. If this thing breaks out past here, I want to be long, um, because this would be a good setup for me. If it actually broke this, I'd be looking at getting long afterwards.
Hmm.
And so that's another good example. It's like when I have that kind of position, I'll set a hard stop. As soon as it takes me out, I'm looking to punch it long. So
Yeah, that makes a lot of sense, especially you said in the discipline part. If I'm not trading well, I'm not able to follow my rules, for whatever reason, then stops is definitely a good way to keep myself honest and make sure that trades don't get out of hand. Because when I'm not trading in discipline, then that's when I could probably do the most damage to my account. So that's where stops really could be helpful.
no, totally agree. And I don't know which one's worse for me. I mean, if I don't use a stop and it rips and I lose $1 when I would planned on losing 20 cents, or I put a stop in place, it wicks me out and it does exactly what I want. I hate losing money. I would rather, I'd rather see this get wicked out and stop. Yes, it's frustrating, but that's a lot better than losing $4,000 when I was planning on losing one.
Exactly.
So
Absolutely. Especially for a smaller account, beginning trader, it's going to be very tough to recover from big losses. So definitely
yeah,
stops is the way to go.
it is. I agree 100%. Looks like this one's for me, huh? Smash, can you share which time frames you're usually using for intraday equity option trades, such as which time frame opportunity searching, time frame executions, things? From Maslin66. Okay, so time frames. Every trade that I take, Netflix is kind of an exception. I know this stock very well. I've been trading it every day. But in general, when I take, let's take a look at something else that we've been looking at here. Tesla, for instance, I don't trade it every day. But I have this set up here. This is a monthly chart. This is a weekly chart with weekly candles. And this is a daily chart. And then I have the 5 minute. So if I put a ticker in here, um, like IQ, let's say. IQ is one that I've been watching here lately since the IPO. So I have an instant monthly, an instant weekly, and an instant daily. So I can do a quick evaluation with one ticker. So every trade I take, I like to base it off of this. NVIDIA is a good one. Let's look at NVIDIA because I know this was a monthly breakout yesterday. So you look at NVIDIA. I can bring this up real quick.
Wow. What a chart.
Yeah, what a beauty, right? Right? So this is actually a monthly breakout here again, and it pulled back right here. And this is one of my setups. So we break this monthly new high, healthy move, comes back, holds it right here's a really good spot right here. Okay, so right in here at the bottom of this candle, is so I make decisions based on if I was going to short this, I wouldn't want to be short right here, right? Because we're in monthly support.
Hmm.
So I mean that's how I use them. I have to have a big picture of things before I pull the trigger.
Yeah, that makes a lot of sense. Trading comes down to just being on the side that it has the path of least resistance, and looking at the bigger time frames can give you a clue as to what's going on in the stock. Is there a bigger picture play, and are you going to be able to find a shorter term setup in a direction of the bigger trend? So that makes a lot of sense. And I would say that if I went back and looked at my trades, and there's probably going to be a um, pretty good setup where you'll see anything I'm going against a bigger trend, I'm probably not doing very well in. I might make some money here and there, but the probabilities are not going to be very good. So definitely having a bigger picture in mind helps. But at the same time, I don't want to just get married to one side just because the bigger picture says up, right? I want to be nimble and reactive, but there's no reason to short something that's straight up.
Right, right. And then that's good. Yeah, that's good. A good point too. You get all these technical levels on these. Like let's say Baba, for instance. This is the one that I actually traded the monthly breakout on this over 206.20. But it comes up and it's just this parabolic move right here. Just because the overall trend is on an uptrend doesn't mean that it's a good place to get long right here, right? I mean, look at that short. So, no, that's a good point. Good point.
All right,
All
good.
right. I think and he asked about the options. If real quick, if when I trade the options, I'm looking at the stock chart. I'm not looking at the options chart. And an option, it'll trade. The price will trade based on the underlying asset. If no sells or buys are made, the stock or the option chart won't print, right? Because every one of these is a print. That's what builds this chart is the actual sell, the print.
Hmm.
So on an option chart, a lot of times the price will move up like this, move down like this, but there hasn't been a single transaction, so it doesn't print. So the option charts are basically worthless. I like to have them up in the level two, and then I'm looking at this ticker. That's how I do them. So
Yeah. So on that note, now that you mentioned options, I mean, you've been crushing it on this on the option side recently, and you like trading the higher price names, right? And then trading the options, and that way it gives you leverage and the ability to jump on board a move and really get yourself a nice gamma trade where your deltas are going up and you're really capitalizing on a move, right?
exactly, exactly. Yeah,
Nice.
yeah. Yesterday was a really good example. We brought it up and talked about it in the group. We chatted about it. This Netflix, it likes to kind of close the gap and rip if the market's strong. So we were talking about looking at some calls right here, 262 or sorry, 362 or 360. Anyway, so we looked at these calls. They went from, if you bought 10 calls, you had $5,000 invested, and just realistically, they went to $10, and that's just somewhere in here. They actually went to 11, but just being realistically, we figure, 560 average. If anybody actually picked them up, it's a 4,400 gain on a $5,600 stock. I mean, on
Okay.
$5,600 investment. It was a total of $4,400 gain. I mean, it's huge. You can't get that on the ticker.
No, absolutely. And I'm guessing you're looking at the weeklies or the front month.
Right, right. Weeklies, the strike was a 360 call, so it's a little bit. It was already in the money, which I like. It's a higher delta. So like a 360 strike, you're gonna have a zero point 0.5 delta. So for every dollar this moves, the option moves 50 cents, right? So it was in the money. It was already at the money or a little bit in the money. The strike price we were looking at. So as this moves, the delta is climbing. So the more parabolic the move, the more the parabolic the option. So
Yep.
it went from, we could have grabbed 5 contracts at 510. I could have grabbed another at 610 off the offer even, and had me around a 560 average. And then so I didn't take this trade because I was really focused on, trading the stock. But like I said, we talked about it prior, and for some of the guys that are really trying to pick up on this option stuff. And it was just an example of showing what's possible. So it was the same with Tesla on the short side. There was some puts right here in this move, double top, get some puts. Yeah, it worked out pretty good.
It's amazing the range you see in some of these bigger cap names, right? I mean, 10, 20, $30 ranges is huge. It's just unbelievable. You got to really find that one low floater to give you this type of move maybe once a month if you're lucky.
Yeah, yeah, so well said. And it's just incredible. This is what I like about them is look at the technical. So this is an old level that I have marked out from who knows when, right? I leave it up there because it was an important level. If it wasn't, I wouldn't have it here.
Hmm.
But it pulled right back to it and it held. Look at it. Bounce, set up a higher low. There's your trigger right there. Get long and look at this thing. It still hasn't stopped. Yeah,
Amazing.
it's incredible.
Nice.
Yep. Some options trades on this too, boy. This right here about $2,000 on this option trade right here on a $2,000 investment. 2,300 gain right here with the right
Sweet.
strike price. Yeah, it's incredible. It's hard to beat. All right.
All right. So let's see. What's this one? Random HB. Can you explain what you were talking about again today about the best way to play an option with a large spread? Was Tesla today where it was brought up? So this kind of you kind of touched upon there. You want to kind of add anything else to this?
Uh, no, I think we covered it. Yeah, I think we covered it. I'll let you do this one. How's that sound?
All right. So if a pro trader is taking a large position on the trade and because of the planned size is working his trades around a core position to accumulate size and get a good average ahead of an anticipated move, where do you draw the line as a trader in separating the risk of closing the trade because of mini swings that might temporarily put you in red? Okay, so basically saying as you're accumulating a position, how do you know where to close out a position? If because it's not just one entry and one exit, right? So how do you know when to cut the trade off? When does it fall apart for you, right? So in my opinion, when I look at a setup, I have a spot where the pattern falls apart, right? So if you look at yesterday, what was this AMRH that we looked at?
All right, let me pull that up here. AMRH.
So there was a pattern here. There was a clear one, and I knew exactly where I would be taking it off before I even put the trade on. So as I'm starting to accumulate the trade, I'm basically looking at how I can get in and not give myself a bad entry. So I might get in here on a pop. I might get in more here. I might get in more here. And I can't do it all one shot because it's just too big and I won't get the fill. I'll get front run. So I'll have to work it, right? But I know that I'm trading either versus this level. And then when we get below here, then all of a sudden I'm trading versus this level. So I might add more here. So to answer the question, I definitely have a number in mind where if it gets there, it's an abort for me and I'm done with the trade. But I will trade around a core. I might buy some on the dip here and put it back out and still have my core position and just try to work into a bigger position as it's working. And if I remember correctly on this one yesterday, that's exactly what was going on. Just adding as it was working, as my pattern starting to develop, and then basically getting bigger at spots where it's just confirming the pattern. And then had this done this, I'm done. I'm out of here and I'll have to work my way out of it. I'll probably have to push it 10, 15 cents. Maybe it take me 10 minutes to get out of position, but I'm done with it. Right. So
Right.
what do you think of that? How do you handle bigger positions and basically closing them out? How do you know that the trade's done?
No, you covered it well. You covered it well. The only thing I might add is I like to work a core. I don't do a whole lot of accumulating. Um, I will, but I consider it working a core. So if I were to be short here, I would be covering into this support, and then I'd be looking to add that back, and then we get another wash. I'd be covering, and I'd be looking to add it back as the flag is doing it. Rather than I'm not one to build a position into this. So I have rules around it. For me, it's just I have rules that say I like to take the bulk of my position initially, and I'm in the money ads. I've got to take a cover. I have to take some profits. That's just one of my rules
Mm-hmm.
before I add. And so what that does is it kind of, if I'm looking at this and I'm going, okay, if this sets up a lower high, this is going to be a killer trade. I can't just add unless I've taken a cover. So it kind of forces me, to book some green, book some green, and then look to add, whether it's half or three quarters or even just a quarter of my position. Um, that's the driver behind it for me, is just to force me to book some green. That way, if it does bounce and rip, I stop out. I might be flat after commissions.
No, that makes a lot of sense. And yeah, you don't want to get too big later on in the trade. You don't want to find yourself having, 5 times the size here as you did here, right? That's not something that I'm interested in. So it usually will start out for me where I might get involved here on the topping tail on volume, anomaly, maybe near level, put some on, and I'll risk the right amount here and probably take some off, like you said, on a drop. And then if it starts to now look like a potential lower high, then that turns into another setup, and then that might turn into like a descending triangle setup, and then that's where I start getting bigger, where one pattern turns into another, and if it turns into my A plus setup, then I will definitely get bigger and bigger as we go.
Very nice, very nice. Good stuff, man. I know that's one of your faves right there, huh?
Yeah, it's definitely a good one. There was a period for a couple of months where they weren't working well, and a lot of these were just, come up here and then start hugging and then curling up and start trapping. It would not stay below here, but this was a classic, and it was really nice. It was a really nice trade yesterday.
Excellent. Excellent. Okay, I trade using the tape a lot, and I keep two time and sells windows with every montage. One shows all the prints, and the other set shows prints above certain value. Depending on the price and flow of the stock, I do this because it helps me gauge important price levels as I trade. It can be difficult keeping an eye on, but it helps me get the job done. Do you think understanding volume profile can make this easier? So let's see. I'm sure most of you probably seen my setup, but I agree with you. So this is divided by 100, right? So this is looking for, basically 1,000 shares. Um, so yeah, when I'm buying a big washout, I like to see this thing's moving quick, moving quick, lots of red, lots of red, lots of red. And as this slows down, and that's when I'm looking to maybe pull the trigger. It really helps me. Like I wouldn't trade without it. It really helps me get a better picture of when the size is pushing down. Now,
Hmm.
especially on something like Netflix, So
Yeah, that makes sense. I like the fact that you're separating the bigger orders on the time and sales from the smaller ones. And I think that definitely plays into reading the tape a little bit better. Um, just going back to my days when I used to execute orders for hedge funds, some of them were pretty big orders, and most of the time you can't just go in and say, I want to buy 500,000 shares of something, right? So going back to the chart, you'll see that there are spots where you can get it done. And that's kind of where I think it comes in handy, like you said. So going back to your time and sales window there, if you see, for example, if I'm an institution and I'm looking to purchase Netflix and I'm looking to get it done, right? So on Netflix, that chart that you had up there before,
yeah,
that one there's a really good example, right? So if I'm an institution and I give a broker an order to buy, I don't know, what's a big order for this, like 50,000 shares of Netflix, right? How could I work that order? I can't work it on the way up because there aren't any offers, and I'm going to have to just chase it up, and I'm just going to end up pushing it up on myself. So as an institution, what what they want to do is they want to pick spots where they know people will be getting out. So this would be an example, right? If there's a level here, you know that once the level is breached, then all the stops will get triggered down here below 364, and a lot of selling will come in. So if I'm a buyer of size, then I'm going to use that opportunity to come in and soak up the shares that people are selling and getting stopped out of here, right? So on the tape, you might see that where you have those large prints going off on your second time in sales there, where everything's getting absorbed to the point where when a lot of trades are going off and you're not seeing this thing continue to go, you're just seeing it go sideways and hold and maybe give you a wick here and a bottoming tail, and then all of a sudden it dries up and you don't see those big prints anymore, then you know that there was some buying here and those absorptions. I could see it definitely how that type of level time and sales could come in handy.
yes, sir, indeed, yes, sir. That's a great example right here. You get all that sell pressure. This thing is ripping. It looks like this. And when that big size kind of starts slowing down, it's about time for a bounce. You can count on it, even if it's not a very big one. You're going to start seeing some kind of bounce, and then you start seeing green here, and then when you start seeing some green here, that's when you might start seeing this. So yeah, it's very, very handy.
Yeah, absolutely. And then I think the second part of that question was volume profile, how it ties into time and sales. And I would say it definitely does. When looking at volume profile today, there was a symbol we were in AXOM, and that one was running. And then it started really putting in heavy volume on the volume profile. Just really 420 was a level where you saw a lot of that. And once it got below it and rejected, then basically AXON, sorry,
Oh, in. Okay.
ON in the end. Yeah, so once it got below here, this 420 level, like over here, my volume profile on the side was just really stacking up. And then when we got below it and came back and retested that breakdown level where all that volume was there, man, that was just a nice little wash. I was a little bit early on this one, early in the morning, so took a little bit of a loss. But then when it's set up, it was just a really nice way to take care of that, to crush the symbol here. But um, time and sales definitely plays into volume profile. I would say if you have your time and sales side by side with a volume profile chart and just watch how it builds over time, then I think you can start to develop a clear picture of how they start to play out together.
Good stuff. Yeah, and it kind of shows here on the volume profile on mine. Right in this area is where you're talking about. It's where the most of the volume was. Once that broke down,
Oh yeah, there you go.
sellers just let me out of here. Let me out of here.
Yeah,
Yeah,
absolutely.
nice, nice.
Good stuff. All right. All right. So, what qualities do you look for when hiring a trader at the firm? Hussein is asking. Good question. Get this one a lot. And I think there's no easy answer to what makes a good trader. It's the whole debate of, is it an art? Is it a science? Is it something you're born with? Is it something that could be taught? Right. But the qualities that we look for when hiring traders, the main one is the ambition and the passion for trading, the ambition to do whatever it takes to succeed. That, that junkyard dog mentality that, hey, nobody's going to stop me. I'm going to bite through metal and I'm going to crash through that wall if I have to succeed as a trader. That's what we look for, because trading is tough and it takes time to learn. It takes, it's definitely a learning curve, and you want to be able to hire people that realize what's going on. It's not just someone that was, finishing with an accounting degree and all of a sudden they came across a job post about trading and they say, you know what, let me give it a try. Maybe I could do well in trading, right? Those people don't stand a chance because they're not committed to it. Just like, who's someone who's not committed to becoming an attorney, they give it a shot, they drop out after a semester or two, right? So that's the main thing for us, that drive, the passion for trading. Someone who shows that, I've tried this for a little bit on my own. I've subscribed to different trading rooms. I read a lot of books, and I journal, and this is what I eat, sleep, breathe. Trading is my life. That's what we're interested in. And then they have to fit into the culture of the firm, get along with everyone. But it's less about the resume. It doesn't have to be that pedigree, Harvard graduate. Those people usually will not do well in trading.
Good stuff, man. Good
You've
stuff.
also, obviously, you're also in touch with quite a bit of traders. And what do you see as far as being successful? What does it take?
I, I'd say being teachable. Leave your ego at the door. It's it's not an easy thing to do, right? But being teachable is important, And I would say that, you know, I mean, if I wasn't married and rooted with, kids and grandkids where I'm at, I'd already be headed to New York or Florida, applying for one of these jobs with you guys.
Well, I got a seat right next to me, Smash.
I couldn't say it enough, the importance of having good traders to be surround you and having a good mentor, someone that will bounce ideas off of you, man. You've been really helpful for me too, which is good.
Oh,
So
absolutely. Same on my part, man. I really appreciate being able to chat with you and talk trade ideas. It's great, and that's definitely a big part. Being able to be teachable and not to think that you know it all. Um, Most of the time, we won't hire individuals who've been in the business for 20 years, and they're going to come in and tell us how it's done. This is not our first rodeo. We've seen a lot of traders make it, and we've seen traders not make it. So we know what it takes.
right, right, awesome, good stuff, man, good stuff. All right, what do you do or suggest to do for not yet consistent trader outside trading hours to get better at trading? What's the necessary homework? So, man, for the first 2 years, I didn't. That's all I did. I eat, sleep. I still do eat, sleep, and breathe the markets. I have to turn this stuff off now and get away. So what's the homework? I don't know. I heard Mike say it on Chat with Traders, man. His Netflix, YouTube is his Netflix. I can relate. I can relate. Watching traders videos, picking up on little small pieces of nuggets and go, you know what? I could incorporate that in my strategy, and you're not going to pick those things up when you're not doing the homework. So, I'd say if you're starting out and in the beginning, my advice is you have to be obsessed. I mean, if you're not, the competition is, I don't know how else to
Yeah,
say it.
absolutely. That's great. Yeah, and just being able to sit there and do the work, right? Not having someone to have to tell you do the work. That's huge. So, what kind of work do you do at the end of the day outside of trading hours? Well, I go over my trades for the day. I journal. I try to take screenshots of setups that I liked, that worked, or setups that I want to be able to execute in the future and turn it into a journal. I want to talk to traders. I want to be in touch with, traders like you, Smash, that I can bounce ideas off of and get feedback that I say, hey, listen, when you bought this here, that was a pretty dumb move. What the heck were you thinking there, right? Or, hey, that's great. I like what you're doing there. I would do the same. Doesn't mean that I'm going to actually now just follow what we just discussed, but it's just another way of looking at it. So trading rooms, YouTube videos, reading books, just trying to gather a little bit from here and there and just making it my own. That's huge.
Good stuff, man. Good stuff.
Strong yay. That's a good one. Strong yay.
Right, right. And be brutally honest. I would add that too. Be brutally honest with yourself when you're looking at your trades, Don't sugarcoat things. Tell yourself like
Absolutely.
it is.
Absolutely. And then when the wife says, yeah, it's time to come up from the basement and come dinner, it's time to go. Don't fight it.
That's right. She is the boss, and I'm with you. And thank goodness for the wives, for good women, because
Oh yeah.
I
Otherwise
probably
it'd be
wouldn't come
just
out of the
24
basement.
hours a day, right?
Right? That's why I haven't touched the bitcoins or anything yet. Seriously, because I'm afraid 24-hour trading is just not good for me.
24, 365.
Right?
You know what we need? We need trading to be dumbed down to like 2 hours a day. Right? Everybody who's got to trade, get it done within 2 hours. And we gotta go to the beach and do everything else.
Sounds like a plan. I like it.
All right, strong yay. Looks like there's another one. What are realistic expectations in terms of time frame going from beginner trader to consistently profitable? What are the shortcuts? What were the most important adjustments that you attribute your consistency to? So shortcuts, I don't think there are any shortcuts. I think you got to put in the screen time. You got to put in the work. You got to. The one shortcut that I could think of is just pair up with someone that you think is going to be a good mentor and truly wants the best for you, not just trying to sell you something. And you know, team up with them and then bounce ideas and try to learn from them. But I don't think there are any traders, any shortcuts. Now, in the beginning, going to a consistently profitable trader, I just found that I try not to do too much early on, and whenever I get too big early in my career, I would just end up losing. Just have a measured approach, grow slowly. The market's not going anywhere. I don't have to become a billionaire in year one of my trading career. Just have to become good and just don't put myself out of the game. Give myself screen time, the ability to learn, and just share ideas with people that I think are good.
Good stuff,
What do
man.
you think, Smash?
I don't know. It's well said. I guess I would add that to the important adjustments to consistency is you're going to lose money. I mean, I lost money. Some of my losses, my most painful moments in trading, um, helped me develop as a trader. There was a couple of times, 2 or 3 weeks, I couldn't even made I was still sick to my stomach. I couldn't even look at a chart, because all you can picture is all the things you could have done with the money you lost on a big loss. And I've had good three of those at least, that were gut wrenching. So those things will teach you, if you just be brutally honest with yourself. And the same with a good win. I had to have a good win for me to really, really believe in the money ads and work in a core. I had to catch a really big winner, and and once I started working that way, you get a taste of it. It's just like a really bad loss. I think it's just as important. You get a really good win, you stop cutting your winners quick, and you start nailing something, a 25-hour trade, and that's just as much of a rush as it is gut wrenching when you lose, in my opinion. So those things are important. You got to get the experience, the screen time. You got to pull the trigger, right? I mean, that's your path to consistency. I don't know if there is any such thing as a shortcut.
Yeah, well said, man. I don't think that you could say it any better than that.
Awesome. All right.
All right.
I forget who's up.
Go ahead.
All right.
Respect.
I see both of y'all playing those big gap downs. What are you looking for, short or long? All right, so I'll jump all over this one here real quick. So I have some setups like trending up gap downs or trending down gap downs. So it depends on the ticker and it depends on the play. It's two different setups for me. If a stock is trending down over on the monthly, especially, it's on a nice downtrend, and then we get a gap down, say on something like earnings. I'm looking at it short. I'm always looking at the big picture. It doesn't mean that it's not
Mhm.
a long. It could be a good long on the bounce, right? But I'm looking at the big picture. So when I see that, um, what is a good one here? I'm trying to think. Maybe when I see that, I'm looking to get short. So if the overall trend is a downtrend, I'm looking to get short. If the overall trend is an uptrend and we get a gap up, I'm looking for some kind of pullback to get long. How about you, Mike?
Yeah, the big caps. I think you said it well. It's that the the trend makes a difference. The charts make a difference, and I try to just read what's going on. So while I come in and I try to figure out what's the catalyst, what's the big picture of the stock, where are some big levels to be aware of, some targets to set maybe. For me, at the end of the day, the days that I trade well and I'm in the zone are usually the days when I do have a thesis, I do have an idea coming in, but I'm reacting off of what I see in real time. And I think that's when I usually trade best. When I'm in the zone is when I'm looking at the time and sales, I'm looking at the chart bar by bar, and then I'm also trying to figure out what other participants are doing. And then that will help me figure out, do I want to go long? Do I want to go short? Or do I want to avoid it? But that's definitely something that I like looking at. So an example would be if you zoom in a little bit, if you just take a stab at it here, um, any point in the chart, like randomly, bam, I pick that spot. Let's say I start
Okay.
looking at the, let's say I start looking at the chart, boom, at that spot. So in my mind now, I've drawn a line in the sand, 59. So 59 is where we're at. And even if I don't take a trade, I just look at it and I say, okay, if it starts to tick up from this price, I have a reference point, 59. That means that the longs are in control, they're happy, and then the shorts are out of the money. And then the opposite is true if it starts to go down. And now I start to get to the point where I'm reading what's going on in the stock, and if it lines up with what I thought coming in with my thesis, with the big picture and the catalyst, then that could turn into a really good trade.
Good
All right.
stuff.
All right. So next one, Batman trades. All right. I keep facing this issue where I want to be right rather than make money. Can you discuss the subconscious urge a bit more? Well, this is a fantastic question. I think it's one that you got to come to terms with if you want to be a successful trader. And most people you'll come across that are good traders, they don't care about being right. They don't care about the win rate. They don't care about how they look in front of others. All they want to do is make money. That's what's important. So having said that, I might have a setup where I might be wrong 3 times in a row, but the fourth time I'm going to nail it and I'm going to make 10R and I'm going to be way ahead of the game after 4 tries. So for me, it's not necessarily being right on a trade. It's really important to think big picture in terms of the setup, but I don't want to think big picture in terms of my career. So when I'm looking at a setup and I want to trade, I have to tune out, what does this trade mean for my career? What does it mean for my month? What does it mean when my wife asks me, how'd you do today? If I tell her I had a losing trade, what is she going to think of me? Right? None of that matters. I don't have to be right. I just want to be reading the tape. I want to be one with the setup. I want to be one with the stock and just try to put up some trades where, I have a little bit of an edge, and over time that plays out. So just, it's really important not to care about big picture or what this means for my career. What do you think?
Yeah, well said, man. Well said. Um, you got me thinking there. See how I say this. So it's not about being right, it's about making money, right? Exactly like you said. I don't, I like to have a plan A and I like to have a plan B. If I'm stopped out, like if I'm going to take a short, I'm looking at the extremes usually where I'm getting in. If I'm proven wrong and it's and I'm taken out of my short, it's usually where it's a good long. And
Hmm.
after a while, I would stop out, lose some money, stop out, and then watch it run. Well, I finally built a setup around it. It's a setup with triggers. So if I'm stopped out on my short, is it a long? And this is a good example yesterday. So I took this short, versus after hour highs, basically, the 364, and working that core. So I was able to cover into this for a nice gain on half my position, and then I took an ad, and then it ripped and I stopped out. Well, so I had already made a nice fat gain on half my position here. So when it ripped, at this point, I don't care. It doesn't matter if I'm right or wrong, right?
Yeah.
I've covered myself. It's like I don't care. I'm actually inviting it. I'm like, you know what? If this thing rips and it takes me out, it's gonna be a good long. So there's no question about it. So even though I took an ad on the short, I ended up losing $54 on this because I got a nice win here. Took my ad, just stuck to the system, stopped me out, um, and I ended up losing 54 bucks on it. I got long, and I had a killer trade on the long side, right? So it's not about being right; it's about making money. You said it best, man.
That's perfect. That's a great example right there, right? It's not about being right. If you want to be right, if that's what you care for, then become an analyst and go on CNBC and present your stocks. But
Right?
if you really need to be able to be right, then you got a problem. You're not going to be able to be a trader. So just focus on the setup, on the process, and leave everything else out.
Yeah, well said. We'll leave it at that, huh?
Yep. Nice.
Good stuff.
All right. Let's see. Did I go last? I'll take this one again. Talk your biggest failures in trading and how you bounce back. Well, I don't think there are too many people in the business that haven't failed. It's impossible to become good without failing. Not just in trading. You want to become a real estate investor, you're going to have to buy a couple of properties that are going to make you rethink what you're doing, right? And then learn. You want to become a trader, you're going to have to blow up a couple of accounts. That's why you got to focus on having a small account, pay your tuition while you have a small account, learn your lessons, and then size up from there. So I've definitely had them, man. I've blown up a couple of accounts. It's not fun, and usually it coincided with some sort of big event in my life, like having a kid born or some big event, and all of a sudden, big picture things start to play into my trading, and before you know it, I'm not trading anymore. I'm just gambling, and I'm not taking losses. And bouncing back just means for me to stop, right? If I'm going in reverse, before I can go forward, I got to go to neutral, pause, get my mind back, get my sanity back, protect capital, and then just inch forward. Base hit. Try to get a couple of days in a row, turns into a week, a month, and before you know it, I forgot about that time.
Yeah, well said, man. Well said. I'm with you 100% on that one. Bounce and how to bounce back. I think from the very beginning, I knew for me that I was going to be a trader. So there was no question about it. I mean, how do I bounce back? It was like I don't care. It hurt. Like I said, that was I had a loss that took me 3 weeks before I could pull the trigger again. Um, so how did I bounce back? I talked about it. Just time takes a little time. I didn't take a single trade until my guts didn't hurt anymore. I waited until I was, like you said, kind of back in my right mind before I did it. I was trading alone at the time, when I took some of my bigger losses. I do things a little different now. I today if I took one in the shorts, man, I'd call Mike. I'd call him up and say, man, I did something really stupid today. So things are a little different for me now. I think it's talking to people is good. Some of my biggest losses, I was on my own, and I talked to my wife a little bit about it, but she didn't help any. She would tell me, God, stop doing that. It's not going to work
stop,
for you.
stop gambling.
Yeah, yeah, you're just gambling. Yeah, exactly.
Yeah, it's such a good example you bring up. Like, if you are in a spot where you can't fail, you're gonna fail. The pressure is just going to be overwhelming. You're going to be reluctant to take losses. So put yourself in a situation where you can fail, and then learn from it. If you put yourself in a situation where you can't fail, guess what? You're going to fail. If you don't if you're looking at a setup and you're waiting for the perfect spot where you're not going to get stopped out, guess what? That's exactly where you're going to be stopped out when you finally do take it. So absolutely,
All
just
right, so true.
plan and don't overthink it. Just do it and do it small so that you can fail and learn from it.
Yeah, good stuff, man. All right, I think this is mine. I don't know. What would you say is your biggest edge in trading, and how do you track setups? My biggest edge in trading. So how do I track setups? I use TraderView. I love TraderView. It's really made my life easier. I used to use Excel. I track the setups, volume, just a lot of stuff. I know my setups now. I know how they set up. I have triggers. So I'm not trying to define my setups anymore. My setups are defined. My rules are defined. And so now I just track them, how well I traded them. And TraderView is excellent for that. Um, but
Mm-hmm.
when I was trying to figure out what worked for me, I used Excel. When I was trying to really build my setups and stuff, I used Excel and I tracked everything I possibly could: volume, time of day, I screenshotted charts, you name it. And I had them linked in my Excel spreadsheets so they would open up for me automatically, things like that. How about you, man?
I think edge is tough to define, and it's something that's kind of fluid. It doesn't it's not always consistent. But as far as my edge, it's kind of a few things coming together that gives me my edge, and then allows me to have a super edge, I would say. So being a part of a trading firm gives me the structure where I can have real edge, right? Not paying commissions, having easy borrows, having great routes, having buying power, having liquidity. Um, all those things to me are an edge. And then they might add a little bit to my overall edge. And then it plays into me just being really nimble, trying not to hit any home runs. Sometimes you end up with a home run, but just knowing that I got to hit singles and doubles, that type of thinking to me is an edge where I know that I can just come in every day, try to hit a single, a double. Sometimes I'll get a nice home run and it's fantastic, but I don't have to be a superstar. And then before you know it, the pressure comes off and then it turns into a real edge in the sense that it's something that's repeatable, it's clear and definable. And I track all that stuff through journaling. I use TraderView like you smash, and I I take screenshots, um, and I have a psychological journal that I write, not every day, but whenever I feel like I've got something to write, um, I'll try to throw in there things that don't relate to a specific setup, something general psychology. So I track both setups in TraderView and screenshots, but I also track myself and how I'm thinking and feeling. And I think that's also an edge.
Awesome. Good stuff. Good stuff. One thing I'd add is just in the beginning, until you define your own edge, until you figure out what that is. I mean, experience is an edge, right? In the beginning, you have no edge. So until you do it, just trade small. One day you will see. You will put together however many green trades, and you'll start feeling like, wow, maybe I have an edge now. you know, so one day you start registering. But until then, it's all about survival. All
Yeah,
right.
and to add to that real quick, I mean, this is not just for beginning traders that are starting to develop an edge. I think experienced traders, seven-figure traders that are kicking ass, they have to still track their setups and know what's working and be able to spot when that's changing. Otherwise, if you keep on trading the same setup and thinking that this is an A plus setup and it changes, and you're going to be upside down and you're going to be sizing up at these things and it could hurt. So definitely track setups and not just for beginning traders. I recommend it for everyone.
Excellent. With you there. Okay, well, how about one more? We're 49 minutes into this, Mike. What do you think? One more?
All right, sounds good. So can you talk more about tape reading? I find level 2 very distracting and not very useful when I'm looking at to enter and exit a trade. I trade the chart. I would like to know how you guys use level 2 in time and sales. So the way I would answer this is when I'm in a position, most of my setups require me to be looking at every tick, every bar, and having a very good understanding of what's going on in the stock, who's in control, having my finger on the pulse. It's very important. So when I look at time and sales, when I look at level 2, I try to figure out absorption under level 2. I try to figure out time and sales, what's going on, where the prints are taking place, what exchanges the trades are occurring on. Is it mostly in the dark? Is it on lit venues? A lot of midpoints. I look at book pressure a lot for the stocks that have heavy level 2 with a thick quote. If the book pressure is to the upside and I should not be able to buy mids, and all of a sudden I throw out a test order and I get filled on 20,000 shares at the mid when I shouldn't be able to get a single share, to me that's information saying there's a seller here that doesn't care about the book pressure. And most of the time those types of sellers are over time. They're not just one-time thing. So I pay attention to my fills and how the book pressure looks in a lot of these stocks. And I just draw these reference lines on charts and I say, all right, where do we go from here? And I try to incorporate charts together with time and sales and level 2.
Good stuff, man. Good stuff. I don't know if I can add anything to that. It's I liked, I like the charts. I like to trade the technicals, but the time and sales gives me the the confirmation that I'm looking for. I don't know. Maybe here's a good example. This 380 is really high volume, so we know this 380 is technical level here. Looking at the chart, right? It's 380s. Let's see, where is it? 380 right in here. It's a pretty good technical level. It came down, it hit it here, bounced over, came back to support, broke it, reclaimed it, 380. There's a lot of volume here. 380 is one of the biggest volumes of the day. So, it's a technical level, but I'm telling you, if it gets down here just like we discussed earlier, and you start printing these 380s, this is the biggest one. That's when pretty much every long from the day is underwater.
Yeah.
We'll start seeing some pressure. So, it's kind of it's like I said, it's kind of experience. I don't know if I could add anything more to it. You've got to be able to look at the whole picture. I don't know how you trade with just a chart. I would be afraid to. So.
Yeah, I definitely find it useful, but it's not any one thing. I think a lot of things have to come together. It's not just level 2. It's not just time and sales. It's charts, it's patterns, it's fundamentals, it's momentum, and that all kind of plays into each other, I think.
Right. With you 100%. All right, man. Let's wrap this up. I really appreciate you doing this with me, Mike.
Absolutely, man. I definitely appreciate this. I think it's a good resource that people should find this useful because, when I was starting out, you didn't have all YouTube back then, and you got lucky if you got your hands on a couple of good books here and there. So I think these types of videos and content is very helpful to the community. We'd love to hear feedback from everybody out there. But I definitely appreciate you doing this, Smash. I think I'm a better trader for knowing you and the discussions that we have outside of trading hours, going over ideas, going over trades. So I definitely appreciate that and look forward to doing more of these together.
Yes, sir. Likewise, brother. Really appreciate it. And you guys out there, we'll get this up on our websites and on YouTube and send us some feedback. Let us know if you like it. Encourage us to do more. We will. All right.
Great stuff, man.
Good, man.
All right. Thanks.
Take care, Mike.